out, they'd be able to aim and fan that and get away with it. Debbie Harry and Blondie there at 105.7 Light FM. Good morning. It's 8:43 now. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And that all means it's time to check in and find out what Wall Street's doing to and for your money this morning. And it was doing quite a bit of good yesterday until the Federal Reserve minutes came out. Let's check in with Philip Statler from Statler Financial Services and get his take on it. Philip, good morning. How are you?
Good morning, Dave. Doing well. I'm going to say that the Fed minutes were definitely a mixed bag. I think they're trying to weigh jobs versus inflation, and
it
it's a
kind of looks
mixed
like
bag.
they came down on the inflation side based on the minutes, and we didn't see any great change in the timber of the committee off of that minute, did we?
No, I think there were. It was. I mean, I think it was pretty much divided, really, from what I gathered. There were some that still want to reduce rates. There's some that want to keep it the same, and there's some that are actually talking now about we may have to raise interest rates.
Takes your breath away. The bottom line was really the odds of another interest rate cut pretty much stay low as they are, and we're looking at one, maybe two total cuts this year, and that's pretty much going to be the end of it. And that did not appear to impress Wall Street very much. The indexes were holding a pretty high number yesterday afternoon until about the time the minutes came out, and then they fell. We ended up green. I mean, the Dow was up 129. The S&P was up by 38. The NASDAQ was up 175. But if we'd held what we were at 1 p.m., it would have been a barn burner good day, wouldn't it?
Yeah, it would have, and I gotta say that the futures are not looking very promising this morning.
Because in part, the jobless claims end up kind of confirming what the Federal Reserve minutes said. We should be worried about inflation more than jobs. First-time jobless claims this morning. Lowest level of the year, a more stable job market. They only showed, 206,000 first-time claims?
Yep, exactly. So that was down for the year and obviously down from last week.
And it appears to be we're kind of entering a good news is bad news situation. Yeah, the no hire, no fire economy is keeping our employment picture relatively stable, but that means no stimulus of lower interest rates, which hacks off all of the short-term institutional buyers. Fair summary?
I think so. I mean, the traders are actually, they may be struggling a little bit.
You're being charitable here, Philip. It's actually not been a really good start for the year. The U.S. stock market, one of my tip sheets was saying, has had its worst start since 1995 compared to global markets, according to Goldman Sachs. Goldman Sachs is starting to say we're starting to look at the notion of investing overseas as being our best opportunities for growth. They're getting downright cynical about our market, I think.
Well, I got to say, really, since kind of the fourth quarter of last year, it's kind of been that way, right? It's been a little up and down, and I don't know that from then to now we've really made much headway.
Yeah, that's true. And all of the economic reports we're getting kind of end up showing that, okay, we're holding on a steady course. We're not booming by any measure. The housing starts figures that you got in the other day, pleasant surprise in December, seasonally adjusted, 4.1% increase. But then we turn around and we get a decline in building permits. So, we get good news and bad news coming out in matched pairs, virtually everything we come out with. It's going to be interesting tomorrow morning when we get a reading on the GDP and that personal consumption expenditure inflation figure, because that may very well change our mind about a couple of things, depending upon how the short-term investors go.
Well, yeah. And so, I mean, tomorrow is really, I think, a big day. I mean, it's going to be, I think, the second reading of the GDP. For 2025. And obviously that's looking backwards. Say how well do we do which is usually most of the government numbers, right? They're all looking backwards as here's how we've done. It's really more important to see how are we going to be doing the rest of this quarter and the rest of this year. And it's kind of hard to track that stuff, Dave. It's kind of hard to figure that out because we got to look backwards to try to gauge what forward might look like for folks.
Now, it's kind of a case of trying to model it down the line. What did you expect versus what really happened? And use what you learn off of that to try to guess what's going to happen in the year ahead. And the word guess has to come with a capital letter on it. We ended up with the original reading for the gross domestic product for 25 was a pleasant surprise. Let's see, what did the last readings say? Yeah, we had a 4.4% reading previously, and the market is expecting a decline to only a 3% growth in the gross domestic product, according to my tip sheet. They're
Mine's
expecting
less. Mine's worse than that, Dave. Mine's 2.5.
They're both big revisions downward from the 4+% reading we had on that first reading. I'm not sure what new data that they're seeing coming into the picture, but this could be a bloodbath tomorrow if it ends up going all the way down to where your tip sheet is saying, right?
Yeah, it definitely is going to be showing that it's not as on fire as they originally thought it was with the first reading.
Yeah, we'll cross our fingers for a pleasant surprise to the upside. It needs to be said, though, if we only settle down to 3%, that's considered a normal growth rate. That's healthy. 4.4% is almost overheating, and that was the number that we had the first time out. So a 3% number would be fine. Your 2.5% would be a little bit of, would be a little contractionary, but either one of them, that kind of a big decline down from the first reading, I'd love to find the flesh out as to what prompted that revision downward, because that's almost catastrophic.
Yeah, it's a substantial down movement, and I wonder, David, how much of it relates to the closing of the government.
It's got to be a part of it down the line. And we keep doing it over and over again, too, because we're in the middle of another partial government shutdown now, which hasn't affected us too much yet. But, there are parts of the TSA. It's working without pay at the moment. It's one of the departments that did fail to get an appropriations bill through. So it's not a fun time to be a government employee by any measure. Among earnings season reports out, the $1 trillion brick and mortar store reported, biggest brick and mortar retailer in the country, and I understand Walmart's got kind of a challenge ahead of them, huh?
Walmart does. I mean, they had a good quarter. I mean, they beat by just a tad, right? They came in at 74 cents versus 73. Revenue slightly above expectations. So everything for the last quarter seemed okay. The issue is, as usual, comes down to what do they foresee? What do they see coming up in the outlook? And it fell very short of what the expectation was from a lot of the different polling agencies. They expect growth to be between 3.5% and 4.5% in this next year. And that was less than the expectation was. That would put him in the earnings of about $2.75 to $2.85. The expectation was closer to almost $3 a share for next year. So they're getting whopped this morning, at least. Yep, they're down about 1/3%. Not bad compared to earlier today. They were down a little over 3%. So,
ouch. I have always accused the Walmart reports as having been written by their lower expectations department, because invariably they end up with a case of loser's limp every time they report. I'm crossing my fingers. That's what this was. I think their PR department talks their stock value down so they can overachieve and go ahead. What else?
Another big staple in our country is John Deere. Yeah. And John Deere reported they beat on both earnings and on revenue. And so they are moving up this morning. They're up 6% this morning, Dave.
John Deere is green, aren't they?
It's funny, man. I remember that was an $80 stock. Now it's $629.
Good heavens.
DoorDash reported. We got some fun names today. DoorDash reported Get this, their total orders increased in the fourth quarter by 32% from a year ago.
Wow.
Yeah, revenue up 38%. However, they missed on their top and bottom line for the fourth quarter. But with all those big increases, the stock's moving forward today, up 8.2%.
How in the heck can you miss your numbers when you grow like that?
Well, I guess because they missed on top and bottom line, the analysts must have been overly excited and moved those numbers a lot higher.
It sounds
So,
like expectations more than reality when you start talking about 30% growth rates and you still miss your numbers.
yeah, exactly. So,
That's
um,
Nvidia style numbers that they were expecting.
hey, interesting with Etsy. Etsy reported um, they beat on earnings, missed on revenue, but they're getting a huge bump today because they are planning on selling their it's called Depop, which is a consumer to consumer marketplace, and they're going to sell that to eBay for, it says, $1.2 billion cash.
Ooh.
So that has Etsy moving up about 20% this morning.
And they'll be able to do cash for their Christmas party.
Yep, there you go. There
All
you
fancy.
go. So that's kind of where we're at this morning. A bunch of other names, but I think we're probably getting close on time. So
I got you. I was going to give you time for one more if you had it, but let's reset the table this morning. Modestly up yesterday at the end. Could have been better until the Fed minutes came out. 45 minutes before we opened this morning. What are we looking at?
so we got red ink, at least on the index side. The Dow is down 1/3%, as well as the S&P 500. Nasdaq 100 is down almost 4/10, and the Russell 2000 is down a little over 0.5%. On the other side, silver up between 8 and 9 tenths, $78.25, trying to get back up to 80. Gold did cross over yesterday the 5,000 mark again, but it's only up about 0.1% right now, $5,014 an ounce. Crude oil, Dave, it is not where you want it to be, up 2% today, $66.35 a barrel.
That's one of my tip sheets was saying that bump up overnight was the falling apart of the Russian-Ukraine peace talks. So we got two areas of the world to watch out and be worried about, and that ends up bidding the price of oil up, evidently. Across the ponds, I look at the Asian Rim. Again, China's closed this week, but everybody else is relatively happy. South Korean exchange was up by over 3% at the 6 a.m. close. So, yeah, there's some good times over there. European markets, on the other hand, are looking at us and saying, huh? Generally, they're down by quite a bit in the case of some cases. Average index is down by about a little over 0.5% halfway through their trading day over in the European community. Getting my retirement together takes an expert pair of eyes to get the risk out of it. Philip, how do I find you to get my plans turned into something I can count on?
Dave, you can give a call at 863-382-0037, or they can go to our website at statlerfinancial.com to schedule a phone call where we can kind of review where they are and where they need to be getting to. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back again tomorrow morning with an update as to what went on today and all those big numbers coming out at 8:30. I will see you then, my friend.
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Folks, again, I want to thank you for joining us today. Weekend's almost here. One more day. Join us again tomorrow, where we'll update you one more time for the week. Take care. Look forward to seeing you tomorrow. Bye now.